Good day, Junior Techies. I'm Mrs. Brimacombe, and we're going to look at Chapter 5, Completing Financial Statements. Now, when we talk about financial statements, we talk about the income statement, another word for that, statement of comprehensive income, the balance sheet, another word, statement of financial position, and then the cash flow statement. Make sure that you familiarize yourself with the different terms. Before you start with any of these activity, ensure that you've gone through the theory booklet. Know exactly the format of each one of these statements before you start with the activity. When we look at Chapter 4, our focus was on adjustments. So whenever you work through these activities and you find that you're not sure about the adjustments, please go back to Chapter 4 and revise and have a look at the adjustments with regards to, for example, a prepaid expense, accrued income. Activity 1, Income Statement. Beaver Limited has an authorized share capital of 5.5 million ordinary shares. Required, prepare the income statement for the year ended 31 March 2021. If our accounting period ends 31 March 2021, it means it starts the 1st of April 2020. Extract from the pre-adjustment trial balance for the year ended 31 March 2021. They provided us with the balance sheet account section and the nominal account section. Then they've given us adjustments and additional information. So we are going to look at step by step, how do we complete an income statement? Now, before we start officially with this activity, in an income statement, we need to reflect all our income and expenses for this accounting period. An accounting period is equal to 12 months. So when we start with the income statement, our step number 1 is we're going to enter all the amounts from the pre-adjustment trial balance and show it in brackets. You would notice that I've only used the nominal account section. Why? In my nominal account section, it reflects all my income and all my expenses. So now make sure that you understand your format. Where do I take what? Once we've taken everything to where it's supposed to go, you would notice on the nominal account section that I've left out dividends on ordinary shares. Why? Dividends on ordinary shares is an expense, but it forms part of the distributions of profits. So that will go to your retained income note number 8. If you show it in your income statement, you will lose marks for a foreign item. It does not belong in there. Also notice cost of sales, question mark, bad debts, question mark. This means that we will need to solve that. So completing this income statement will not be from the beginning to the end. We will need to find the missing figures. So we will probably need to work out from the bottom up. Once we've completed step number 1, we are now going to go to step number 2, completing the adjustments. Only do a T account if you are not sure, should I plus or should I minus? Sometimes also doing a T account will get you to the answer much quicker and easier. Use it as a tool if you are not sure. Otherwise, what we need to do now is we look at the adjustments and we are going to adjust all the totals that we've already written in the income statement. Reminder that there is year-end adjustments which we do not have in the pre-adjustment trial balance, which should be included, like my depreciation, trading stock surplus or trading stock deficit, provision for bad debts adjustment. The first adjustment, the business maintains a markup of 100% on cost. Note, trade discount of 148,000 were granted to special customers. So this means we need to calculate our cost of sales. To calculate our cost of sales, we need to add the trade discount to the sales figure. And once we've added that, then we can use the markup to calculate our cost of sales. Completing this now in my income statement, I can start by saying sales, there were no adjustment. This means sales equals the same amount as in the pre-adjustment trial balance. We have calculated the cost of sales, so now we can calculate sales minus cost of sales equals the gross profit. The bank statement for March 2021 was received after the trial balance was drawn up. The business invested 1.5 million in a fixed deposit at Fixed Bank at an interest rate of 18% per annum. We are going to do nothing with this adjustment. Why? We are not required to complete the balance sheet. And we're not going to calculate the interest. Number one, this is at the end of the accounting period. So we're only going to calculate interest from the 1st of April 2021, and that is outside of our accounting period. Secondly, they said to you that an investment was made at an interest rate of 18% per annum. So be careful when looking at this adjustment. It is not relevant to the income statement. So don't calculate the interest and show it as interest income. Bank charges of 260. This means that we need to add the bank charges. So we are going to say plus 260 to the 19,600. Then interest on credit balance 180. Credit balance from the bank perspective. On my bank statement, credit means positive, debit means negative. So when it says interest on credit balance 180, it means that we've received interest. So this must go to interest income, and we're going to say plus 180. Received 55,250 from the insurance company for an insurance claim. Stock was damaged due to a fire in one of the storerooms. They paid out 65% of the total damage. So what is important to calculate here? Number one, I need to open a T account for trading stock, or make a note somewhere on your question paper or on your answer booklet. Why? Because we will need to calculate trading stock deficit or trading stock surplus. And to calculate that, we need to use our updated trading stock balance. And this is a common mistake we make in exams and tests. We use the amount from the pre-adjustment trial balance when comparing it to the physical stock take. But now there was an adjustment to that trading stock. So make sure that you calculate that figure. So when we calculate this, the damage is equal to 100%. The insurance paid out 65%, which means our loss only amounted to 35%. So when calculating the total damage, the 100%, we're going to say 55,250 times 100 divided by 65. The 65 represent the amount the insurance paid out. To calculate the loss, I've got now two options. I can either say 85,000 minus the amount which the insurance paid out, or we can say 55,250 and we times it by 55 divided by 65. The 55 was the total loss. We took 100 minus the 65. So those are my two options to calculate the loss due to fire. Adjustment number 3. A physical stock count at the end of the year highlighted the following: trading stock amounted to 233,000. So as I've said before, you cannot take the amount from the pre-adjustment trial balance and compare that to the trading stock amount physically counted. Why? There was loss due to fire, which we needed to show. So to calculate this is why my advice would be in a test and exam, open up trading stock as a T account. Yes, trading stock does not appear in your income statement, but I need the trading stock so that I can make sure that I show all the adjustments and then compare my new updated balance to the physical stock count. So looking at what happened with our trading stock, we've got the balance from the pre-adjustment trial balance minus the loss due to the fire minus the balance of the stock that we physically counted equals a deficit of 7,000. If I take the balance from the pre-adjustment minus the loss, 85,000, my trading stock balance according to my T account should be 240,000. But if we compare to what we physically counted, you will see 240,000 minus the 233,000 provides you with a deficit of 7,000. On my income statement, make sure that you show your calculations in brackets, especially if you do not complete a T account. So we've got the balance from the pre-adjustment minus the loss minus that which we physically counted. If I look at the packing material, they said to you 7,950 of packing material was used during the financial year. So that means that is your final figure, 7,950. So you can immediately show that as your final amount. The 650 will go to note number 4, your inventories, which is not required in this activity. Adjust the provision for bad debts to 4% of the book debt. When we talk about the book debt, we talk specifically about the balance in the debtors control. There were no adjustment to the debtors control account if you look at everything we've done from number 1 up to this point. So this means we can use the total 245,000 and we're going to times it by 4%. My provision for bad debts must now be adjusted to 9,800. So if you're not sure, you can open a T account. From the pre-adjustment trial balance, it's 9,400. It should now increase to 9,800. And as soon as we increase the amount, it means the provision for bad debts adjustment is an expense and the difference is 400. This is the amount that will appear in your income statement. Again, only do the T account if you're not sure. If you calculate now, it should be 9,800, but it is 9,400. You should know this will need to be increased, and if we increase it, it means it goes to my operating expenses, provision for bad debts adjustment 400. Commission income still due for March 2021, 32,000. If it's still due, it means we need to add the 32,000 to the amount from the pre-adjustment trial balance. The salaries journal for March 2021 was completed. The accountant had, however, forgotten to complete the required posting to the general ledger. The journal revealed the following details. So we've got the gross monthly salary, we've got the deductions and the net salary. They said to us the employer contributes on a rand for rand basis to the pension fund and the medical aid fund. Where do I start? I only care about the gross salary and the contributions because that is my expense which should reflect in the income statement. But now we've got a question mark and we've got a question mark. So how do we solve the gross salary? We need to look at what other information is given to us. They said to you the pension, medical aid and SARS, the total percentage of that is equal to 34%. So to calculate the gross, we are going to take all the deductions, which is equal to 5,100, and we're going to times it by 100 divided by 34. And that equals my gross salary. Because we've excluded it, we've omitted it, we still need to add it. This is why we've got salaries and wages plus 15,000. If we contribute on a rand for rand basis, it means if 1,500 is deducted, 1,500 is added to the pension fund. If 800 is deducted for medical aid, it means 800 is contributed. And this is why we've got plus. We do not contribute towards the SARS pay as you earn. Interest on loan is capitalized. It means it's added to the loan account. The following details have been extracted from the loan statement obtained from Moneybank. So we need to calculate the interest on loan. So to calculate this, we work always from the bottom to the top. And if we work from the bottom to the top, we have to do opposite calculations. Just remember that. So if we look now at our calculation, we are going to say 420,000 plus 100,800 minus 500, the balance in the beginning, and that equals our interest. If you are not sure how to do it in this way, you can open a T account, and that forms part of my calculations. So if I look at the T account, we've got the balance in the beginning, total repayment, including interest, will appear on the debit side. Balance at the end, balance brought down means balance carried down. So if I take the debit side minus the credit side, it equals the interest of 20,800. Adjustment 8. The tenant did some repairs to the office building to the value of 18,500. It was agreed that this amount will be offset against the rent owed for March and April 2021. So what is happening here is that we need to show, number one, the repairs that was done. It is our expense. Secondly, instead now of this tenant paying us rent, he paid us in the form of the repairs. That's what it says. It will be offset against the rent owed. So he still owes rent for March. We need to find what is that monthly amount, because whatever is outstanding, we will need to add it to the rent income so that it reflects our income for this accounting period. So to calculate this, it's not that complicated. If we've only received the rent for 11 months, we're going to take the amount from the pre-adjustment trial balance and we're going to divide it by 11. This means that the rent outstanding is 14,500. I do not care about any of the contra accounts because we're only completing the income statement. This means that 14,500 must be added to the rent income, and we need to show the repairs 18,500. If you do a T account, take note of the following. The total brought forward from the pre-adjustment plus the repairs, which is going to be offset against the rent income. My total income for this accounting period is supposed to be 174,000. We calculate that by taking 14,500 times 12. You could have written that figure as your final figure in your income statement. So this means that this tenant has paid rent in advance with 4,000 because of the repairs. It's not relevant to the income statement. I'm just explaining so that you know what is happening with this adjustment. Directors' fees of 60,000 were incorrectly debited against the salaries and wages account. Reminder, directors' fees must be shown separately. It doesn't form part of the salaries and wages. This is why we will need to take it out of the salaries and wages. So we say minus 60,000 and we're going to add it to the director's fee. Adjustment 10. The auditors are owed a further 38,000 after completing the audit. Again, anything that is still outstanding must be added. So in my audit fees, we are going to say plus 38,000. Income tax for the year amounted to 324,800. This was calculated at 28% of the net profit. So step number 1, you're going to show your income statement, in your income statement, the income tax, and it must be in brackets. Now I've got two options. I can either calculate the net profit before tax or the net profit after tax. To calculate the net profit before tax, we are going to say the income tax amount times 100 divided by 28. So now I can say net profit before minus income tax, or we can say the income tax amount times 72 divided by 28 equals the net profit after tax. So to calculate the net profit before tax, we would then take the net profit after tax plus the income tax. Once we've completed all the adjustments, we are going to close all the brackets. Reminder, bad debts had a question mark. It means it's the balancing figure. Once we've now calculated all the final amounts and we've shown the amounts in our income statement, we can look in solving the rest of the missing amounts. So starting at the top, what can I solve? I know that sales minus cost of sales equals gross profit. I can calculate the operating income. To calculate the operating income, we have to add the commission plus the rent income. Once we've got the operating income, we can calculate the gross operating income. To calculate that, we take the gross profit plus other operating income equals the gross operating income. Reminder, I cannot solve the operating expenses because bad debts still has a missing figure. This means we need to start now at the bottom. What can we solve? If we look at the net profit before interest expense, to calculate that, we're going to take the net profit before tax plus interest expense equals net profit before interest expense. Opposite calculations. To calculate the operating profit, we can now take the net profit before interest expense, and now we need to minus the interest. Once we've calculated the operating profit, we can now calculate the operating expense. Take the gross operating income minus the operating profit equals my operating expense. Now we can solve the bad debts by taking operating expense minus all my expenses listed. And that will be the balancing figure of 55,995. You must please expect this type of question at grade 12 level. Thank you very much. In our next activity, activity 2, we are going to look at a different way in which the income statement can be asked by calculating the correct net profit, and we're going to look at how we're going to complete the note to the balance sheet. I want to leave you with this quote: your future depends on what you do today, and your today has already started. I hope you have a wonderful day.